with BIS Commodities. And starting out today or this afternoon, just like to take a look where we are for the week. We were able to close March corn up 30 cents on the week. We were able to close March soybeans up 8 cents on the week, and we were able to close March wheat up 10 cents on the week. Cattle, we were able to, unfortunately, we closed cattle down $2.28 in the February contract. And the February contract for lean hogs, we closed down $1.87. This week built up all week long towards the report we've seen today. It was the quarterly stocks report and the monthly supply and demand report. A lot of numbers flushed at us today, and it was the first time we've seen this report take place at 11 o'clock. So we were expecting a lot of volatility, which we did see some right prior to the open, but we seem to settle down as the day wore on. The stocks number came in at a little over $8 billion. That was down about $200 million from what the pre-trade estimates were. Was a supportive factor for corn. Soybeans came in about just at 1.96 billion bushels, down about 15 million from the trade estimate, and wheat came in at 1.66 billion, down 14 million from what the trade estimated. So when we've seen the reduction in the stocks on corn in the supply and demand balance sheet, we've seen it come basically from the feed and residual side of the equation. Feed usage was up 300 million. But we did see harvested acres and yield per acre get offset somewhat by that reduction or the increase in feed demand. We've seen harvested acres actually down 400,000, but we increased the yield per acre, a bushel an acre, which overall increased our total production at 10.78 billion bushels, which was up 55 million bushels from last month when the trade was looking for a decrease there. We also seen a decrease in exports of 200 million bushels, which isn't a great shock as the pace of exports have been slowed at this point. So early on in the trade, we did see a positive push in the markets. Basically, the trade was bull spreading the market. We were buying the front end of the contracts up, selling the deferreds that continued throughout the day, and we closed with a strong bull spread in place as well. As we look forward, obviously, ending stocks are very tight for corn, down around 600 million bushels, and that's right down at pipeline levels, down about 45 from the last month's carry-out number, and obviously tighter than what the trade expected. So we were able to again bounce off that today. As we look forward to upcoming weeks, months ahead, it looks like cash and basis is going to have to do the work in this market along with the bull spreads. Something certainly to keep an eye on as we move forward. The report for soybeans today was viewed fairly neutral early on. We did see an increase in production numbers. We were able to see an increase in 44 million bushels on the total production numbers. We've seen an increase of a third of a bushel or 0.3 bushels per acre. That was offset by the crush, up 35 million, domestic crush here in the United States. Surprisingly, we left exports alone. The rapid pace we've seen in exports, the trade was expecting an increase in exports. I think the surprise came that it came in from the crush. So when we take those figures into account, our carryout actually increased 5 million bushels. Not much change from last month, but I think the surprise that was seen was without a reduction in the export number in the oncoming South American crop, we've seen a little pressure in the soy complex today. Keep in mind, South America currently is looking at a 30 to 35 million metric ton increase over last year at this point, and I think that weighed on the market as our carryout number was left alone. Briefly on the wheat balance sheet, we did see a reduction in the wheat stocks as mentioned earlier. Everything on the balance sheet was pretty much neutral, other than the fact that we did see an increase in feed usage in wheat as well, which reduced our carryout. So that we did get our feed usage increase for corn and wheat, and that was offset some extent by increased production estimates in the corn. But needless to say, wheat was able to hold its gains today. Wheat is somewhat short by the managed fund community, and we've probably seen some short covering coming into play today. Taking a look at the cattle market for the week, we did whack cattle futures pretty good this week. There was some money flow coming into this market the end of the year on the idea of tight numbers, but what has failed to happen at this point is the cash market to follow up. We're seeing a light trade last week, light cash trade this week as well, and I think that weight on the futures, so we've seen some of that investment money leak out. Technically, the cattle market does look weak, and I think that caused some selling off of the longs. When we take a look at the boxes in the cattle market right now, the Choice Select spread continues to narrow, and the combination of Choice and Select is trading right around 189. 190 is a tough resistance area to get to combined, but from the Packers' perspective, they're going to have to see those boxes push up so they can price up the cash. And we have yet to see that, not knowing if that will materialize next week or not, but the trade was concerned. The stale longs decided to get out today as this week progressed as well. Hog market, probably some spillover from the weakness in the cattle market. We've seen hogs sell off as well. Technically, the charts don't look as well there either. The cash trade was somewhat mixed this week, but with the hog and pig numbers we've seen at the end of the year, told us that the numbers hadn't changed much. I think we've seen some money flow out of the hog market as well. If you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.